Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, senior editor at Weiss Ratings. Welcome back to the show, Sean.
Thanks for having me on.
Sean, the conflict between Ukraine and Russia, well, it's not a fake deal anymore. What's it going to do, first of all, to the stock markets? I notice indices around the planet were all down, but nobody took a bigger hit than the Russian stock market.
Yeah, well, it seems to be everyone's doing a complete dash for cash. That's why almost everything's being sold. I mean, even though the price of oil is like way up, Brent's over $100 as you and I talk, and the U.S. oil benchmark touched 100 and then pulled back, but it's still up. You know, I mean, even though we have that, most oil stocks are down. It's not because I think people think those are going to do badly. It's just they want to raise cash. And so, you're seeing the good sold along with the bad. So if you've had cash in a stockpile, you know, you can now look forward to deploying it, maybe not today, but in the near future. And so I think it's probably too late to sell. I mean, unless you absolutely have to, which apparently many people do. There are going to be some margin calls at the end of the day. You can bet on that. But you should definitely start making your shopping list, because we talk about buying during corrections. Well, this is a big correction right here. And so it'll be a good time to go shopping.
Mm-hmm. Now, gold, it would be a natural, I would think, in conflicting times. Well,
yes. We saw gold spike this morning, pulled back quite a bit. Gold miners, most gold miners are not up. I mean, I have some that are up, and that's good. But if you look at, say, a chart of, say, the GDX, which is the Van Eck Vectors Gold Miners ETF, just as an example, that is not a recommendation. I'm just using that as an example because that's a basket of the biggest gold miners, right? Well, that gapped higher, opened way up, and as you and I talk, it's actually trading below its close of yesterday. That's generally seen as a bearish move. So, could be profit taking, but we have seen the past few days that even though gold has been going higher, gold miners have not. Most gold miners have not. Now, a few are, and I'm lucky to own a couple of those, but this seems to be a time when people want to own the metal, not the miners. There could be a whole bunch of things to do with that. I think uncertainty is the big thing. Gold is a very certain thing. A company that's, you know, really being pushed around by the whims of the market, not so much. So, again, you can look for good buying opportunities. At these prices, some of these gold miners are going to be printing money, you know, and so, I would continue to look mainly at producers or near-term producers, because companies that have to raise money in this environment, again, that's more uncertainty. They're probably going to continue to still be hammered, but your producers should do okay.
Energy, we already talked about that, but LNG in Europe, the overnight price of natural gas went up 30%.
Yeah, and that's helping a couple of our positions that are heavily levered toward natural gas. Most of our oil positions are down. I've actually been taking profits into the most recent rally. But we heard at least one natural gas exporter come out and say that this conflict, and European demand especially, is just going to be so strong for its business. It's going to be a huge boost for it. And so that's a stock that's up strongly today. And certain stocks that are leveraged to natural gas, especially exports, people should keep that in mind, should continue to do very well. Now, they could still get dragged down in a deep market sell-off, right? Because, as the old saying goes, when the paddy wagon comes along, it takes the good girls downtown along with the bad. You can have a great stock, but in a bad market, it's still going to get dragged down. However, you do know that a strong stock is going to rebound harder than the others, so you definitely want to keep it on your radar and pick an entry point sometime, maybe.
Mm-hmm. Agricultural commodities, Ukraine, Russia produce 25% of the world's wheat. I don't think we can count too much on Ukraine right now to produce much of anything. So, does that mean that we're going to see very expensive wheat and wheat products?
Well, we already are.
Mm-hmm.
I just wrote a column for WealthWave, which you can find at voiceratings.com, which is a free column, where I talked about one of the strongest plays in this will be agricultural plays. Agriculture products were already heading higher. This is just really lighting the candle on that rocket. Now, one thing people have to keep in mind is that there's plenty of demand out there, so it's a supply squeeze. And if the Russians block Ukrainian exports, or if, God forbid, the government of Ukraine falls and there's chaos in that country, that's a real problem for the global markets. So definitely keep an eye on that. Ukraine is the biggest exporter of corn to China, so there are ways to play the corn market. There are some funds. They're called exchange-traded products. I won't mention the exact names. They're in my column, though, if you go look that up. And so you don't need to own futures to trade wheat or corn or soybeans. There are funds you can buy that will actually do it for you. They're all doing very, very well. And I expect they'll probably do better because I don't think this problem is going away in the short term. One thing people might want to keep in mind is we haven't really slapped sanctions on the Russians yet. I think part of that is because the Biden administration is trying to see if it can ink a new nuclear deal with the Iranians. You'll remember that Trump crashed the old deal they had, so for a few years Iran's been making as much enriched uranium as it wants. In a new deal, they'll give all that enriched uranium to someone else in exchange for being able to export oil and gas and stuff like that. So if that happens, and it could happen as soon as the end of next week, that will be a bearish force on the market for the energy sector. What happens between now and then, though, could be a wild ride. One thing that I would remind people is that Russia's exports of very important materials, they export 45.6% of the world's palladium, 15.1% of the world's platinum, 8.4% of the world's gold, 6.2% of the world's natural gas, 5.3% of the world's nickel. The list goes on. Russia is a massive commodities exporter. Ukraine is a massive agricultural exporter, but it also has things like the largest proven uranium reserves in Europe, massive reserves of titanium, manganese, iron, natural gas. So, you put those things together, conflict enveloping those two countries and the subsequent sanctions that come with it can really upset the cart for the commodities market as a whole. You'll see things that, will have huge price swings, not only up, but down, because things will be worked out. I hear now that Russian oil is being sold at its steepest discount ever right now, simply because they're afraid there'll be sanctions, so they're trying to move out the door what they can. So there could be wild swings in this market. There are opportunities for nimble investors. If you aren't a day trader, you might want to take a step back and think about what you want to do longer term and see pullbacks for the opportunities they are. I think we're in a big bull market anyway. This is just short-term confusion and fire. And so when there are pullbacks, I think those pullbacks can be bought.
We'll have more with Sean Brodrick right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Sean Brodrick, playing the long game here. Then do we wait for the stock markets to stabilize because everybody's down around the planet and buy the dips?
Well, I don't think what we're seeing in the market is bottoming right now. I mean, if you reverse the chart of, say, the S&P 500, it would look like it's breaking out to the upside. Now it's breaking out to the downside. So wait for a bottom to form before you rush in there. That would be my choice. That doesn't mean you can't buy select things. As I said, there are bargains. I have things in the portfolio that are going higher. And so certain things are good to buy now. Most things, though, will get cheaper. So wait for your opportunities. Those chances will come along. And I think, I mean, we always complain that stocks are too expensive, right? Well, now we're having the rebalancing process where things are going to get cheaper. And also, this is taking place against a backdrop of something I think you and I have talked about, something I've been telling my subscribers about, is the big rotation from growth to value. That's ongoing, still happening. And so certainly value stocks are still beaten down. They haven't gone anywhere near where they should. And now you're getting a chance to buy some value stocks again on the cheap. I wouldn't pass up that opportunity. Again, wait for the bottom and then pick them up. And I think you can do pretty well.
Marijuana stocks, have they come back?
No. Yeah, let's end on a down note. No, marijuana stocks have not come back. They were looking like they came back. I was quite bullish for a short period. But the past week, ever since the Russians started to invade, actually, or I should say started to beat the drums of war, marijuana stocks have really fallen hard. Now, I thought they were being hurt because we're starting to see tighter money. Let me tell you, this is not the kind of environment where the Fed is going to raise interest rates 9 times in a row the way J.P. Morgan is talking about. We'll be lucky to see 4. So it's not tight money. I think it's just people don't want to buy speculative stocks right now, and cannabis stocks are seen as speculative stocks. So they're being sold hard. There are some which should not be affected by what's going on in Russia at the least. Nothing about Russia, nothing about Ukraine affects these stocks. And yet they are being dumped out like they're being thrown out of a 40-story window. So, I don't think people should be picking things up right now. If you have some profits, might be a time to take some. Definitely get some cash on the sidelines because a buying opportunity will come. And, that's probably one of the most undervalued industries right now is the cannabis industry. Just incredibly undervalued. I'm not sure what exactly it'll take for that to turn around. I can tell you the war isn't helping that whole industry right now, though.
What's going on with cryptocurrencies?
God knows. I'm not a crypto guy. I think I've spelled that out a few times.
Yeah.
So, one thing we have seen is that in the rush for safety, Bitcoin's kind of failing that measure. Everybody's going into gold, not into Bitcoin. I don't know why it is. I think half of cryptocurrencies are outright scams. So I'm not the person to ask about that. And so, that's someone else. I have no idea.
Yeah, well, again, with cryptos, all it takes is one good cyber attack, and you may not be able to find your account.
Or, who knows? I mean, if you speak to people who are really bullish on that industry, they will argue every point with you. I don't have the time or the energy to worry about that. I invest in things that are real. Things that are real are doing pretty well right now. Not today, but they have been doing well recently. We've been taking some nice gains. And I expect we will in the future. I don't care a whit about what happens in the crypto market.
Now, on things that are real, then gold, natural gas, things that you can get a handle on and can see worldwide consumption, and it doesn't depend on somebody's computer functioning at that moment or not. Is that more important for long-term investors?
No, I think so. That's kind of a softball question there, kiddo.
Well, I played slow pitch.
I mean,
what can I say?
My entire career is built around saying that. Don't feed me those big fat softballs. I'll knock them all the way to Mars.
What
yes,
can we?
You should be buying real things.
Yeah. Now, what can we see shortages from Russia? What are some of the things that the Russians provide to us that we might find hard to find, or are they in that position? I know they produce a lot of oil, they produce a lot of gold, but are there things that they produce that we really need?
Definitely palladium, platinum, nickel, aluminum too. The aluminum market's skin tight already. Prices are making new records. What if we sanction Russian aluminum exports? That's not going to be any fun for anybody who needs aluminum, and we all use aluminum. You know, they also export copper, gold a bit, silver. So there's a lot of things they export. Yeah, I mean, it isn't just oil and gas. People always think of Russia as a petrostate. It's much more than that. It's a vast country, many natural resources, many underexploited, many yet to be discovered. So, yeah, it could be really problematic. Let me close by saying I really wish peace for Ukraine. I don't want any of this stuff to happen. I hate the thought of, like, profiting from, you know, tragedy. On the other hand, I'd be doing my subscribers a real disservice if I didn't try to put their portfolios in the best positions possible. So I'm making recommendations that I think will do well. They can follow them or not. That's up to them. But, you know, I mean, we are in a terrible state. This is going to roil the commodity markets. That usually means profits for people who are on the right side of those trades. You can also lose, of course, too. But just try and keep a clear head. I think you'll be okay.
Mm-hmm. Sean, thank you so much for chatting with us.
Thanks very much.
My guest has been Sean Brodrick, Senior Editor at WeissRatings.com. If you have any questions for Sean or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.